Hi, I'm Zane Tomkowski, and for my MBA final project, I will be evaluating external and internal influences of mortgage loan officers. So, mortgage loan officer, a job defined in an article online from Forbes website was a loan officer is just typically the smiling face of an institution, and this job is often to accept an application that the borrower has filled out and then hand it off to the underwriting department for review. At First Commonwealth, it's more than just that. We take an application, we gather the information, gather various documents to verify employment and residence history, and also to document many debts out there and see if it's affordable for a customer to afford this specific mortgage. So, the process of obtaining a loan. So, I found this online at fcbanking.com, and step one was apply and getting started. And with this, you can either apply online and do a full application online, or you can sit face to face with a mortgage loan officer. It's honestly just customer preference, and that usually determines what kind of borrower they are, if they're tech savvy or if they're more of the old fashioned person that likes to sit down and talk face to face with it. And the last thing, I have a mortgage checklist. So with this, I'll kind of um, outline how an application is started or pre-qualification. So, as a mortgage loan officer, I take some information. I ask questions about employment history, the resident history, and personal information such as date of birth, social security number, your full name, and how much money you have for closing costs and down payment. And this usually determines what is the best program for this specific customer to be in, and it also determines what's the best route for us to go to approach and allow the underwriters to review it. So there's several types of loans. And the fixed rate loan, I mean, that's pretty standard. They usually are broken down into conventional and government loans. And I have a couple of these government loans: FHA, VA, USDA. A conventional loan, and usually that's just the old fashioned 5%, 20% down with some mortgage insurance. Most people that do conventional have a little more money to work with, and this allows them to suffer a little bit of higher interest rate compared to these Govy loans. And they usually, like I said, have more money to put down, so um, they can go conventional, and they're a little easier on the restrictions of peeling paint and missing railing and such on the appraisal reports. An ARM is usually for a lot loan. What I mean this is if someone's buying land and later going to build a construction, they're going to get either a 3-year, 5-year, or 7-year loan. In addition to a lot loan, multiple people that are supposed to come into money in the future, such as they're expecting a huge amount of money to be in their life in a couple years, they'll take this for the lowest interest rate possible, and they'll pay off the loan as quickly as possible. Construction loans, these are the stick builds. Modular are the houses that come on tractor trailers, which we're just starting to get into that business, but for the most part, we stick to strictly stick built, and this is the excavation and the construction's done on site, because this allows us to monitor the process and not lose any of our money or overpay for the process. FHA loan. So this first government loan that I'll outline is a 3.5% down payment, and you have to invest this in or you won't get the loan. And they are a little less stingy on the credit score. They allow you to go down to the minimum that we provided of 620, but they can only lend up to 271. And a customer that would fit in this program has a higher DTI but has less money to get into a house. PHFA, this loan is mainly used for people with low amount of income and they don't have much money to get into the house. So the PHFA, which is PA Housing Finance Agency, will help with closing costs and down payment and allow these people to get into houses for cheap. VA loans, this is for a veteran. So these are probably the best loan I think that are possible, because they're 100% finance in the VA. So a veteran is not responsible for any closing costs at all. They can get into the house for basically free, and the seller is usually the one to suffer from this, and they usually have to pay for everything. The only thing with this is you have to have your DD 214, which is proof that you were in a certain in the Air Force, the Army, or anything, but it's proof that you're registered in Europe if like you can get into this program. The USDA, and this is a rural housing association, and that with this they allow for anybody that lives out in the country, but with this, I mean, all of Evansburg is USDA, so it just determines the kind of where you lie on the map. But there's income limits. You can only, I think it's $78,200 for a household, and it increases with the household size. But with this, you can only have a certain amount of debt to income. So with that, I mean, we take your gross amount of income, and the front part of the ratio is how much the house is worth, and then you can only have 29% of your gross income and your debt to income be for the house, whereas the back end has to be only 43%. So they're very stingy with their income guidelines. Marketing. So some external environmental factors include marketing, technological, which I will outline on this slide. The realtors, they drive everything. They give you the business in Johnstone. Johnstone is very reliable on their realtors, and they dominate the market for mortgages. Products. We often market our products to both internal bank colleagues who are the face of our financial solution service. People are the face of the bank, and they talk to customers every day, and we just want to make sure that they're asking the correct questions if they want to have a mortgage through us, and we kind of outline our products that we have for them, as well as the realtors, as they can determine which is the best bank or place to receive a mortgage, and hopeful that it will be First Commonwealth. Technological. So we provide an online accessibility. If you go to fcbanking.com, you can complete a whole application that I outline with the questions, your income, and your residence history, all online, and you do not have to meet face to face. And that's how I outline these online applications. And with this, we also have an online mortgage website that allows you to receive your application package online, and you can e-sign, and it saves a lot of time for everyone. This CardTap app is an app that we have been using. It's a rather smaller app that everybody is starting to get into, but it's a business card online and allows you to predict your monthly payment as well as interest rates and such with the credit score. Cell phone availability. This is a big influence on mortgage loan officers. You have to be on call 24/7 or you will lose that dream deal that you've been wanting for so long. Competition. So everyone's rate shopping, and in that one article that I outlined, why wouldn't you do this? And a mortgage, the person that wrote this article, his name was Matt Green. Why rate shop? And with this, he said, why wouldn't you rate shop if everybody is willing to give you a less rate and save you more money just because they want your business? Products. There's different products amongst different institutions. We provide a first front door, which helps with people with less money out of pocket, and they only need $1,700 into a deal. And this helps with people that are less fortunate, that don't have as much money or don't have as much income as, say a person that has enough money for a 20% down and is an absolute perfect pre-qual customer. And then customer service, I think this is very important amongst competition. I think most people will choose a helping hand rather than a person that doesn't answer the phone. We've heard multiple people complain about this before, so we try to provide the utmost customer service. The socio-cultural external environment. So with this, there's medical profession because we're adapting to each culture. So with this medical professional, we try to help doctors that are in their residence years that don't have a lot of money and have an abundance of student debt. With this, we also have the first front door that I briefly mentioned, and this is to help the less fortunate people that don't make as much money as they're on the lower income, and I think it's like $38,000 to $40,000 a year, and this helps with people getting into their dream house. So the legal aspect, I think this is the most important, and this governs how we determine which customers are approved for programs, and this determines which way to go with a certain customer. So DTI ratios. As I outlined previously, FHA will end up to like 50%, which is very high, as well as a conventional. It's been 45%, but as of recently, they're starting to go to 50%. And with these, the government loans such as USDA and VA, they determine your DTI and they will not lend above 45 or 43. We have various portfolio products that also we do not allow the DTI to be above 43, and that's our First at Home, and that's a $2,000 grant that we match. If you put $2,000 into an investment, the $2,000 is matched by a First Commonwealth grant program. Credit score. The main credit score is 620 that we apply by. That's a minimum score. USDA abides by 640. And as I previously mentioned, government regulations. So for VA, there's pest inspections that you have to have completed. USDA, it's the income limits as well as the areas that you are looking to invest in a mortgage. And FHA is mainly the DTI that they allow that, but you have to have the minimum investment of 3.5% on a specific purchase price. And these all detail to certain programs, and these government regulations deter people from being in certain programs, but also help people in certain programs. The internal factors. So the sales team, mortgage loan officers, they have a lot on their plate. They have to provide synopsis leads and talk to realtors, market, everything that I outlined. And the management roles are often to keep these mortgage loan officers on track to meet settlement dates that are provided by realtors. And the fulfillment team, this is the other side of the transaction. Loan processors are responsible for ordering title, ordering their appraisal, ordering tax transcripts, whereas the disclosing team is responsible for providing the application package. Underwriters review the whole application, every file, every income document, everything, and they will determine by the Freddie and Fannie Mac guidelines if a person is fit for a mortgage. The loan closers, they play an important role in balancing transactions, and they balance with the title company who's responsible for closing the loan and making sure all the money is in the right hands. So customers. Customers are extremely important to our process. The communication amongst mortgage loan officers between customers and realtors is extremely vital to ensure that the process is meeting its time frame, because in turn this will make overall customer satisfaction happy. And we have been doing surveys recently, and the one that customers most mention is the communication. Organizational skills, this is something that as a company we have been kind of cracking down on and trying to improve constantly. That way it's easy for everyone who, starting with the mortgage loan officer organizing the file, and then the processor to putting everything in the right place, and the underwriters being able to find all the information. The education of the customer is also very important. This will determine if somebody is more face-to-face or if they're technological savvy. And people that have done mortgages before compared to first-time home buyers are usually a little like they're helpful. They always have their information ready, and it's a little easier to gather their income docs such as pay stubs, bank statements, W-2s, and tax returns. And this also fits with the organizational skills. If a customer is organized, you'll be able to obtain all these income documents pretty easily, and it'll be a smooth transaction. And as I previously mentioned, an online application for the technical savvy people. So employees, communication is vital. We often have a conversation log that outlines the whole transaction, and this allows for people to understand what is going on during the whole process, as well as keeping up with the realtors is important, and processors often communicate with the appraisers for the appraisal report, which underwriters constantly are picking at every single detail of an appraisal. Management interaction between fulfillment side, which is all of these employees compared to the management, they communicate daily, and they determine if a settlement date is reached, and often they battle on certain little details that Freddie and Fannie outline, but our sales managers don't agree with. So we think that we could close these loans, and if we have to, we'll put them into port and keep them and not sell them on the second.